Hi, everybody. This is Peter Schiff. It is Thursday, July 3rd, 2014. Well, the Dow surged above 17,000 today for the first time ever. The media, of course, is going to make a big deal about this 17,000 milestone. Of course, adjusted for inflation, the Dow is still substantially below the level it reached in the year 2000. The catalyst for today's upward move in the Dow was the much better than expected non-farm payroll numbers for June that were released earlier this morning. 288,000 jobs were created during the month of June, exceeding the consensus estimate on Wall Street by a considerable number. In fact, the government was able to revise upwards some of the numbers from prior months. So Wall Street was very excited about this number, as they normally are. President Obama didn't waste any time claiming credit for, I believe he said, the fastest job creation, I think, since 1999. And yes, we are creating a lot of jobs. Unfortunately, they're not the kind of jobs that most Americans want. And they're not the kind of jobs that most Americans can support a family on, or even, in many cases, support themselves. The problem with the jobs that Obama is bragging about creating is that many of them are part-time jobs, they're temporary jobs, they are low-paying jobs, they are jobs that don't come with benefits. The jobs are being created in retail. These are cashiers, stock boys, sales clerks, hotels. You're talking about bellhops, orderlies, janitors, also in restaurants, waiters, bartenders, dishwashers. These are not the kind of jobs that most people aspire to. And the problem is a lot of the people taking these jobs have college degrees for which they borrowed a lot of money to obtain. So not only do they have a low-paying job, but a lot of that income is being used to repay the money they borrowed to go to college, so they're still stuck living at home with their parents. But one of the worst statistics that nobody seems to be talking about, again, nobody wants to look beneath the surface because maybe they're afraid of what they're going to see. But during the month of June, and this is according to the government, right? I'm not making this stuff up. This is the Bureau of Labor Statistics. These are the same people that gave us the non-farm payroll number. And by the way, the unemployment rate also dropped to 6.1% because more Americans left the labor force. In fact, the labor force participation rate is still at a 35-year low of 62.8. It hasn't improved at all. But the worst statistic, again, that nobody is talking about, during the month of June, almost 800,000, 799,000, I guess to be exact, part-time jobs were created. Almost 800,000. That is the most in any month since 1993. 800,000. Also, during the month of June, 523,000 full-time jobs were lost. 523,000. That means when the government reported that 288,000 jobs were created, that was the net when you offset the full-time jobs lost with the part-time jobs created. If the government simply reported the number of full-time jobs created in June, they would have reported minus 523,000. I mean, how would Wall Street react to a non-farm payroll number of minus 523,000? Well, obviously, they'd be in shock, but they don't have to see it because it's masked, right? It's hiding behind the 800,000 part-time jobs that were created. Why are we creating all these part-time jobs? Well, because a lot of companies are switching their workforce from full-time to part-time because they want to get out from under the requirements of Obamacare. But does this mean that the economy is vibrant and producing jobs? No. If you're eliminating your full-time employees, you have to replace them with more part-time people. You have more people doing less work, so you need more of them. In fact, many of the people in these statistics might have lost a full-time job, and now they got 2 part-time jobs to make up the difference. So that counts as a net job being created. even if those two part-time jobs collectively pay less than the one full-time job used to pay. But according to President Obama, hey, he'll take credit for that because two is greater than one. Well, sometimes it's not. Sometimes two part-time jobs are not better than one full-time job. And you can't have a full-time economy with part-time workers, right? You can't support a family on a part-time paycheck. You can't pay a full-time mortgage with a part-time income. That is the problem. So beneath the surface, it's a very different story in the labor market. Of course, we got a better glimpse of what's happening in the economy the other week when the government revised down their estimates for first quarter GDP. The government now admits that the economy contracted by 2.96%. Call it 3%. That's basically where you would round it. They rounded it down to 2.9, but 2.96, I don't know where they learned how to round. That rounds to 3% as far as I'm concerned. 3% contraction in the GDP. Now, they want to blame it on the weather and say we don't have to worry about it because it was cold and there was some snow. But come on, it wasn't that cold. There wasn't that much snow. I mean, this is the 10th worst winter in the last 50 years, yet we haven't had a GDP number this bad. In fact, if you don't count recessions, this is the worst GDP quarter in a non-recessionary period, I think, in like 60 years. And in fact, of the worst 25 quarters we've had since World War II, and this one is in there, and I forget what number it is, maybe number 17, but of the worst 25, there's only one quarter where it didn't happen in a recession, and that was the one that we just had. And so who knows, maybe we are in a recession, but the government just isn't admitting it. We'll see what the GDP number is going to be in the second quarter. Clearly, it's going to bounce back somewhat because there is some pent-up demand because of the cold weather. We might get a bounce, but will we get a bounce high enough to offset the 3% decline in Q1? I doubt it. And remember, going into Q1 at the end of the last quarter of 2013, people were looking for 3% or more for the first quarter. Instead, we got -3. The weather didn't knock off 6 points. At best, maybe it knocked off 2 points, maybe a little more, based on historically what happens when you have a really bad winter. But there is no historical precedence for 6 points of a GDP because of the snow and the cold weather. It is wishful thinking. They are trying to rationalize away the weakness in the economy because it doesn't fit into their scenario. And now people are claiming that this new information, the strong job growth, proves that it was all about the weather. Well, this isn't strong job growth. This is simply the restructuring of the U.S. labor market from full-time workers to part-time workers, from high-paying jobs to low-paying jobs. And you cannot build a real economic recovery on that type of restructuring. In fact, the labor force participation rate, which I mentioned, right, down at 62.8, Janet Yellen was actually asked about that during her last press conference, if she was concerned. And Janet Yellen's response was, well, we watch it, but it's mostly demographic. She said that the baby boomer generation is getting old and people are starting to retire. And so naturally, if people are retiring, they're leaving the labor force. And so that's why the labor force participation rate is declining. See, the problem with that answer is that it's completely wrong. Now, I don't know whether or not Janet Yellen just doesn't have any of this information and she's just talking, off the cuff. And she really has no idea what she's saying, but she wants to come up with an answer because she wants to pretend she knows something. So she's just making something up that sounds plausible. I mean, that's one possibility. The other possibility is that she's just lying because she doesn't want to tell the congressman the truth because it's very scary. But here's the truth, right? And I looked at this chart that was up on the Zero Hedge website. And this is, again, government numbers, Bureau of Labor Statistics. Unfortunately, it only goes from 2005 to 2010. But I'm sure the trend that ended in 2010 in these numbers is continuing up until 2014. But from 2005 to 2010, the only age groups that showed an increase in labor force participation were people 65 and older. So people 65 to 69, labor force participation went up. 70 to 74, it went up. And even for people older than 75, labor force participation went up. Where it's collapsing is for young people. In the 16 to 19 age group, it went down from 36.5 to 25.9. 20 to 24, it went from 68 to 60.3. And all the other age groups went down. That's the opposite of what Janet Yellen claimed. It's not old people retiring. They're not retiring. In fact, many old people are coming out of retirement and back into the workforce. Why is it that so many people who want to retire can't, and so many people who are retired are being forced back into the labor force even though they don't want to be there? And maybe one of the reasons that Janet Yellen doesn't want to acknowledge this is because she doesn't want to accept responsibility, because it's the Federal Reserve that is the principal cause. By keeping interest rates at zero, retirees have low incomes because they live off of interest payments on their savings. And those payments are now a lot lower thanks to Janet Yellen and Ben Bernanke, and but also thanks to the Federal Reserve. The cost of living is going up, right? They're creating all this inflation with 0% interest rates and QE. So the cost of food is going up, the cost of healthcare is going up, the cost of electricity is going up. So senior citizens are seeing an increase in their cost of living, yet they have less money to pay those higher costs because interest rates are so low. So they can't afford to retire. And if they are retired, they got to start working. The people who are not participating in the labor force are the younger people, the opposite of what Janet Yellen says. And this is a big problem. We need those young people in the labor force. They need to be accumulating skills so that they can advance and earn more money and pay more taxes and help support the economy. But that's not happening. And now you've got the government that wants to, make it even worse by increasing the minimum wage, make it even higher for people, harder for people to get entry-level jobs. So the truth is that the economy is contracting, and it's scary. Again, either Janet Yellen has no idea what she's talking about, or she's just lying. So she's either incompetent or she's a liar. But either way, right? Either scenario is bad when it comes to the Federal Reserve. And by the way, the inflation numbers that we just got, the most recent CPI, shows year-over-year price increases at 2.1%. 2.1% is above the 2% level, right? And now, with unemployment officially at 6.1%, we've blown away both goalposts. Remember the initial goalposts for the Fed to raise rates? 6.5% unemployment, 2% inflation. We're beyond both. Yet there's no rate hikes anywhere on the horizon. The Fed is downplaying them. In fact, they're still doing QE. I mean, they're tapering it a bit, but they're still doing it. Yet they're supposed to be raising interest rates already, which of course they're not. I said that at the very beginning. I said initially when they established these goalposts that they would continue to move them, that they would never raise interest rates because they can't. They're in this box where the minute they raise interest rates, the party is over. The phony recovery that they created comes to an end. Yeah, anybody can start taking drugs. That's the easy part. It's kicking the habit that's the hard part. So going on QE is easy. Going off, see, that's impossible. Not without having a worse financial crisis than the one we had before the QE even started. But, Yellen has to just dismiss inflation. She says it's noise. Yeah, well, it's going to get a lot noisier, and she's going to have a deaf ear to it. And the markets eventually are going to figure this out, that it's all bark and no bite from Janet Yellen when it comes to inflation. In fact, that might be one of the reasons that the precious metals market is acting so strong, even in the face of this better than expected economic data. We've had days in the last couple of weeks where you would have expected a big sell-off in gold. And certainly they tried to sell the market down, but they couldn't do it, right? Because the buyers are coming in and they're running out of sellers. And if a market won't go down on bad news, well, then it's only got one direction to go, and that's up. And, gold was up almost 10% in the first half of the year. You don't really hear too much about that on the news. They want to focus on the Dow. The Dow was only up about 2% in the first half of 2014. So gold did a lot better than the stock market, and I think gold is going to do much better than the stock market in the second half of 2014, and nobody expects that. All of the Wall Street experts, all the big banks were universally bearish on gold. They were all expecting a big decline in 2014, and so far they've been wrong. The price has gone up, and they are sticking to their guns. They're just as bearish now as they were 6 months ago. So they're saying the rally's not going to last. Don't worry. The price is going to collapse. Keep shorting it. Well, if you want to lose a lot of money, then follow Wall Street's advice. Because I think the price of gold is going to go up. And when the shorts realize how much higher it's going to go, they're going to be forced to cover these positions. And I think there's going to be a lot of money lost on the short side of the gold market. Silver, obviously, as well. And as the Fed continues to turn a blind eye to the inflation problem, and I believe as we continue to get more negative economic data, right, the GDP numbers that we're going to get through the end of 2014 are going to very much disappoint the consensus and Wall Street, the Fed. The economy is far weaker than is generally perceived, and inflation is a much greater threat than is generally perceived. In fact, a lot of people perceive inflation as a positive, that the threat is that there's not enough inflation, that having inflation is some kind of necessary ingredient to economic growth. It's not, but all the central bankers are trying to plant these seeds of disinformation in people's heads so that as the inflation problem worsens, people are not worried about it. But average Americans, who have to live in the inflationary environment that the Fed has created, they're going to worry about it. And as people wake up to the reality of inflation, as they're doing now in Japan, which now in Japan, they've got year-over-year inflation of 3.7%. I know they say, well, take out fresh food. Well, you still got 3.2% is their core. And you know what? It's getting worse. It's not getting better. The crazy thing is they're still talking about trying to get inflation up to 2%. When they passed 2% a long time ago. You got to look in the rearview mirror way back to see 2% inflation in Japan. Who knows how much higher it's going to go? But you know what? It ain't a good thing. And the Japanese don't like it. And the economy is actually weakening. And if you take a weak economy and mix it in with high inflation, you don't get progress. You get something that we call stagflation. And that's what Abenomics equals. It's stagflation. And the Japanese aren't going to like it any more than we liked it. When we had it, although we actually still have it. We just don't want to acknowledge it. We want to hide behind phony statistics, but it's going to get a lot worse. And at some point, it will be impossible to deny the reality. A lot of Americans, individual Americans, know it. It's just that a lot of people on Wall Street haven't figured it out. The same thing happened at the beginning of the Great Recession. Remember, the Great Recession started in the fourth quarter of 2007. But people on Wall Street were denying that a recession was even possible at that point. But if you go back, and I pointed it out at the time when I was doing talk shows, the public felt the recession. If you looked at all of the polls, and they were taking a lot of polls back then because you had the 2008 election coming up, and the public was very negative on the economy. And all the so-called experts couldn't figure out why the public didn't know how great things were. They thought there was some disconnect, that maybe President Bush was having a hard time communicating how great the economy was to the voters. Well, the reality was the economy stank. Bush didn't know it, but the voters did, and neither did all of the experts. So they thought there was some kind of disconnect between the polls and the public. The real disconnect was between Wall Street and reality, because the public knew that things weren't good. They knew it because they were living in it. And then, of course, after the fact, the government came out and said, yeah, we were in a recession. The people were right and the experts were wrong. Well, I think the same thing is happening again today. Poll the public and they'll tell you how bad it is. Most people still think we're in a recession. Why do you think the president's popularity is so low? Even Democrats don't like him. Why do you think Congress's popularity is so bad? If we really had this big recovery, if things really were getting better, our leaders would be more popular. People would be more satisfied. They're not. They're just as pessimistic now as they were leading up to the financial crisis or the Great Recession of 2008. Why? Because they are living in this. right? The experts, the wealthier Wall Street bankers, they can deny the suffering that other people are experiencing. But real Americans living in the real world, the ones that lost their full-time jobs, the ones that have these crappy part-time jobs that the president is so proud to have created, or that don't even have any jobs at all, and they're living under a pile of debt, and they're having to deal with an increasing cost of living, and Wall Street and the Fed pretend that it doesn't exist, or they're saying we need even more inflation. They know the reality. But just like they were right then, I think the public in this case, not that they're so smart, but they understand their own circumstances. Right? They know if their financial situation is improving. They might not understand what to do about it. The public is not a good arbiter of knowing what to do. They're not going to support the right economic policy. Right? They don't know what we need to do, but they know enough to know there's a problem because they're living it. They're feeling it. Right? And so they're expressing their disgust and their discomfort at their circumstances in these opinion polls. They don't know what to do about it, but at least they know that there's a problem, which is more than you can say for the experts who are still in denial and just staring at the averages and saying, hey, the Dow Jones is up, right? The value of my mansion went up, right? So therefore, the economy must be improving. But the reality is the economy is not improving. All that's happening is inflation is temporarily elevating the value of these assets. But a lot of people don't own stocks, and they don't own a house, and even if they own a house, they're still underwater on their mortgage. So the appreciation in the price hasn't done them any good. Maybe it's done the bank some good because now their assets are a little bit better, but it doesn't do the homeowner any good who still has negative equity. Hey, that's it for now. Everybody have a great 4th of July weekend. Continue to look forward to more of these Schiff Report video blogs. And again, if you want the day-to-day, reaction to the day-to-day goings-on in the markets, make sure and listen to the radio broadcast every day at schiffradio.com. I do it for 2 hours a day, 10 a.m. to noon, Monday through Fridays. Website, schiffradio.com. And if you can't listen live, just go to the website and listen any time of day that you want to the rebroadcast of the show. Bye for now.